One company just saw its delivery volume surge up to 73% as it started replacing imports in a market that was earlier ruled by foreign players. The other, a rail component manufacturer, reported a 130% year-on-year profit jump, driven by demand from Indian Railways and a strong capex plan. Let's talk about two companies that are quietly getting stronger and could do well in the coming years as India's infrastructure and housing demands rises. Hi, and welcome to another exciting edition of Noisemaker, where we keep things simple and focus on companies that often go unnoticed but have strong potential. But before deep diving into the companies, here is the standard disclaimer. Any discussion, facts, or writing provided are for informational purposes only and do not constitute a buy or sell recommendation. Please conduct your own due diligence before making any investment decisions. So let's start. First company, Greenpanel Industries, which is engaged in the manufacturing of plywood, medium density fiber boards, MDF, and allied products, witnessed a surge in its delivery volume on 26 May, reaching 73% compared to previous day delivery of 59.4% and a 64.1% monthly delivery volume average. This big jump was backed by the commercial launch of its new thin MDF line at the Tirupati plant. This is important because thin MDF was earlier mostly imported and foreign companies controlled over 60% of this market. But now monthly imports have dropped to just 1100 cubic meters and Greenpanel is perfectly placed to fill the gap. And since its plant is located in South India, it also saves on transport costs and can supply faster. Talking about the financials, the company reported rupees 375 crore in revenue in Q4 FY25, showing a growth of 4.2% compared to previous quarter. For the full year FY25, revenue stood at rupees 1436 crore, down by 8.4% year-on-year. Though this decline was partially offset by better margin in the final quarter. In fact, EBITDA margin jumped to 15.9%, up from 5% in Q3, and net profit margin reached 8.7%, showing a stronger recovery from earlier quarter. This improvement was mainly due to better use of its factories, lower raw material costs, and also the new plant didn't add too many fixed expenses. Talking about the future plans of the company, Greenpanel is planning to grow MDF volumes by 8 to 10% in FY26, supported by 30% additional capacity and a broader shift from plywood to MDF across India. The company target sales of 5.5 lakh cubic meters with 72,000 from the new thin MDF line and 80,000 from export. Also, margin expected to stay around 12%, excluding EPCG benefits. With more people choosing modular furniture and the housing market improving, Greenpanel seems ready for a better year ahead. Next company is Frontier Springs, a company that manufactures high-grade coil springs, air springs, and forged components for railway wagons, coaches, and locomotives. Recently reported a strong Q4 FY25 with a revenue of rupees 70 crore, up 58.7% year-on-year, while EBITDA doubled to rupees 17 crore and PAT jumped 130.9% to rupees 12 crore. For the full year, revenue grew by 70.8% to rupees 231 crore, driven by a successful capacity expansion, commissioning of a new 6-ton hammer, and better realization across product categories. Operationally, the company posted EBITDA margins of 23.9% in Q4 FY25 and net profit margins hit 16.6%. These numbers show that the company is managing its cost well and benefiting from higher sales. Also, the promoter holding stayed in the same at 51.8% and public shareholding dropped slightly, possibly a sign that promoters are confident about the company's future. Looking forward, the company plans an additional rupees 15 crore capex in FY26 in plant and machinery to meet rising demand and targets rupees 375 crore in gross revenues by FY26 and rupees 500 crore by FY27, backed by a strong order book and healthy demand from both domestic and global rail infrastructure programs. Also, with the Indian government allowing 100% FDI in railways and planning to spend rupees $120 billion in the next 5 years on railway infrastructure, Frontier Springs is in a good position to grow. Now, let's review some of our previous picks. So, the first, Dhanuka Agritech, covered at rupees 1,620, is currently trading at 1,666. up by 2.8%. Rosari Biotech covered at rupees 715.6 is currently trading at 665.9, down by 6.9%. Lumex Auto Tech Limited covered at 649.8 is currently trading at 690, up by 6.1%. Intera Building Solutions Limited covered at 1889 is currently trading at 2100, up by 11.1%. Gabriel India Limited covered at 628.9 is currently trading at 656, up by 4.3%. Now, let's head to the summary of today's recent filing. First, Greenpanel Industries Ltd. Daily volume spiked as the company ramped up its new thin MDF line, aims for 30% volume growth in FY26 by using new capacity and improving margins through better factory use and cost control. Second company, Frontier Springs Ltd. Posted strong profit in Q4 and FY25 with over 70% year-on-year revenue growth. With upcoming railway order and fresh investment, the company is aiming for rupees 500 crore revenue by FY27. So that's a wrap up for today's edition of the Noisemaker. If you like this breakdown, you can scan the QR as you can see on the screen to read the full report. We will be back soon with more simple and clear market updates. Until then, stay curious, stay informed, and stay ahead.